Good afternoon, guys. It's Saturday, November 20th. My name is Dave Coker, and this is, of course, talking about finance. Let's start out as we always do by taking a look at the markets. We've got a nice heat map here from FinViz, and we can see, looking at the heat map, sort of an odd week, really. Lots of red all over, but overall, the S&P 500 was up 32 basis points at the end of the week. It traded as high as 45 basis points on Thursday, down a little bit. The VIX traded up to close at 17.91 on Friday. Not super worrisome what's going on there. Generally increasing all week. We'll have to pay attention to that. The 10-year closed at 1.54, and oil bled off a little bit. Dropped a little bit. It's down to 75.67 on Friday in New York. It's up some 56% year to date. So this market, really, really odd. We're up about 25% year to date. We're on track to have the third year of double-digit gains. That's extremely rare when that type of stuff happens. So we'll have to track it. It's really interesting. There's only been one 5% dip. Reasonable question is FOMO driving it? Fear of missing out? Yeah, I kind of think it is. A lot of people are paying stupid money for stocks, and valuations are getting real bizarre. There's pockets of euphoria. Take a look at meme stocks, crypto-related, things like that. Overall, though, aside from these pockets of euphoria, it's getting very quiet, or it seems very quiet, and I'm a little nervous. It reminds me of those old Westerns, too quiet, right? So I'm a little nervous about overall, but let's just go with it. Let's see what happens. Let's try to make some money out of this situation. Speaking of money, guess who's got it all? And this is something anybody could have predicted. Again, mainstream media, especially in the States, oblivious to this. They don't really talk about this. They like to view themselves as being the wealthiest people. We know that 76% of billionaires are not American. Only 24% of global billionaires are American. And it turns out the Chinese are pretty darn good. I've always maintained they're very, very good capitalists. And now it looks like they're very, very good accumulators of wealth, which we've known for quite a while. I know they tend to hide it. They don't brag about it, but it's starting to come out. And it's really fascinating to see just how much money is over there in China compared to the US and to the other G7 countries. Really, really fascinating. Of course, China transitioning from a manufacturing to a services economy. The US has been a services economy for many years. And this always gives rise to stock market valuations. It always drives increases in stock market valuations. Now here I've got the Shiller PE. Really fascinating to take a look at this. We're really looking at Shiller's PE valuation. It's on his website. You can take a look at it. And again, this is off the Telegram channel. I can't remember who contributed it. We started chatting about it. And I've got some of my own research that corroborates this. We're really in an overvalued period right now. Taking a look at Shiller PEs, we're at 40 times. Started 2000, we were at 44. Take a look at the .com. Take a look at 1929. This cheap money that the Fed's been engaged in for too long, and the G7 has been engaged in for too long, is really starting to get out of control. And it's starting to distort stuff in a major, major way. Yes, there's a crash coming, and it's going to be epic. And again, we can look at this many ways. Let's not just look at Shiller PE. This is off some of my own research. Here we're looking at a variation of the Buffett index. And what we're doing is we're looking at stock market capitalization divided by GDP. I'm just using a different index than what Warren Buffett uses. I'm using the Wilshire 5000, which of course is all publicly listed companies, publicly traded companies in the United States. And take a look at the .com level and take a look at where we are now. Once again, stocks. Now, Tina, she's a very harsh mistress, driving us all into stocks, or driving many people into stocks. Should you be holding stocks? Should you be buying more? Well, you gotta think twice. It's a long way down. Here's an interesting one. Again, off my research. I'm taking a look at the annual dividend divided by the S&P 500. And what we're doing is we're looking at how much one share of the S&P 500 pays in dividends divided by how much it costs. Financial crisis, we saw a huge drop, as you can verify from the bottom chart where we're looking at SPX, a huge drop in the S&P 500. Yields soared, would have been a good time to buy, without a doubt. Over here, the Corona crash, yields soared once again, would have been a good time to buy. What are you going to do now, guys? I mean, honestly, look at this. Who is going to be buying, establishing new positions, or even, and I haven't been adding to positions for a while now, even though my stuff pays dividends and I'm not really looking at share prices, but it's just too expensive. So what are you going to do? You're going to buy? I'd be very, very careful about that. One thing you might want to take a look at And as I've mentioned many, many times, the bulk of my money is in dividend paying stocks, bullion, gold and silver specifically, and property, a huge chunk in property. And yes, it turns out that people are starting to reevaluate property because it doesn't matter. You buy property, you certainly don't flip it next week like you do a stock, a meme stock or something like that. You buy it, you hold on to it. I've never sold a property. I've got a bad habit of moving to a country, buying property, holding on to it. And yeah, we're starting to see a reinterest, a renewed focus, I should say, in property as a place to put wealth. It's really important to think about this because the Western democracies are becoming aged. We're seeing the average age increase. We're seeing retirements boom. Some 18,000 people a day in the United States retire. What are you going to be putting your money in? Stocks? Can you ride out that volatility? Should you even be putting money in stocks when valuations are so absurd? I like property for one basic reason. First of all, it's it's a tangible, real asset. That's the fundamental reason why I like it. It's not a piece of paper. Nobody can take it away from you as long as you haven't broken any laws acquiring it. And furthermore, property, I don't buy vanity properties. Everything I own pays me rent, except for the property we live in. I got to charge the wife some rent. That would make it, the circle would be complete then. But aside from that, I generate dividends. I generate cash flow, so to speak, off my property portfolio. And people are starting to pay more attention to it now. People in the business of wealth management starting to drive people away from stocks, away from bonds, and into property for a simple reason. It's where you want to be putting your money to plan for your retirement. And this is very fascinating. We saw that CalPERS is actually using leverage now. Wild. Why are they doing this? CalPERS, of course, the California Public Employee Retirement System, one of the biggest retirement funds in the States, or the biggest retirement fund in the States. They're leveraging up. They're moving into alternative assets. They're looking at crazy plays. Why are they doing this? Well, people are living longer. They don't have the good grace to die when we plan for them to die. In other words, you retire at 65, you're out of the door by 85. People are living well past 100 now. Lots of people, a lot of these retirement plans, and CalPERS is extremely well run, but a lot of these retirement plans in the Western democracies don't have the money. They can't fund the liabilities. That's why they're leveraging. That's why they're moving into alternative assets. It's really interesting. Now, they haven't moved yet into crypto. At some point, they might. I can't remember who put this up on the Telegram channel, but this elicited a lot of chatter. Think about where you are, guys, with your investments. Are you investing for days? Are you investing for years? Or like me, are you investing forever, for decades? It makes a big difference because, as I shared with you guys many times, every Friday I buy Bitcoin. Although this week I bought on Tuesday as well as Friday. Had to show solidarity with my people. Bitcoin got spanked hard Monday. I bought Tuesday, also bought Friday. Doesn't matter. I'm in the game for a long time. I have no plans to sell any Bitcoin. I might start using it as collateral to take loans out to buy property, but I won't be selling any Bitcoin. Some people, they come in and they try to be traders. They try to play traders, I should say, and they're in the market for days. Lots of volatility, lots of risk, lots of stress. Just ain't worth it. Even years, in my point of view, just ain't worth it. Buy and hold forever. That's what I'm doing with crypto. That's what I've done with dividend-paying stocks. That's what I'm doing with property. About the only positions I trade in and out of are gold and silver. As I shared with you a while ago, I went hard into gold and silver in 04 and 05. And by 2014, I had sold it all, bought 4 houses, paid cash. And now 67% of my retirement money is sitting in gold and silver. And I have every expectation to sell out, maybe by second half of next year. And I'll be buying more property with it. All right, guys, that's it for this week. You're going to have a wonderful week. Remember, we're in a Santa Claus rally, general melt up to the markets. Just put some money on the table, make some money. Buy yourself some decent dividend-paying stocks. Sit back, collect cash flow, collect dividends. It's the only way, the only surefire way to get rich. Day trading, swing trader, no, you ain't making no money. You ain't. Buy and hold. Buy and hold dividend-paying stocks. Thanks for your time, guys. Have a great week. Take care.